Hey, what is going on, my friends, and welcome back to another video on the channel. Well, as you can tell from the title, today we are going over Castor Maritime, ticker symbol CTRM. Well, yesterday they did release their end of the quarter financial results as well as the results from 2020, and I must say that I am very pleased with the information that we did receive. Today's video, I will go over all of these financial results, what I think it means for the company. We'll take a look at the Baltic Dry Index, we'll get an overall idea of what we can expect from the next financial results, and I will go over what I will be doing with this company going forward. If you are looking forward to today's video, you can let me know by smashing that like button and subscribing to the channel if you are new. And with that being said, let's go ahead and let's jump straight into the video. Now, as you can see here on my Patreon, I did release all of this information a few hours ago, and then for my Silver and Plus tiers members, I actually released all of the notes that I took from their financial results as well as all the links and anything that I used to do my due diligence. So if you are interested in getting all of this information as well as access to my trades, my trade portfolio, and a new daily newsletter that I have now included into my Patreon, definitely go down to the link in the description. It'll bring you over to the Patreon, and that is where I'm fully transparent with all of this information. Also, if you are looking to start your own investment journey or grow out into a new brokerage, I 100% recommend using the referral link down below. It'll bring you over to Webull. Go ahead, open an account, deposit $100, and you will get 2 free stocks valued all the way up to $1,850. Well, with that being said, what did we get from Castor Maritime today? What all type of information can we gather from this, and what am I expecting going into the future? Well, there were some pretty good moments about this. There were some good aspects that I really think Castor Maritime capitalized on well, and I'm very excited about these results. Now, first and foremost, we do see here that revenues netted at about $4.4 million for the 3 months ended December 31st, 2020, as compared to $2.8 million for the 3 months ended December 31st in the previous year. That results to a 57% period-to-period increase. Now, one reason that I do believe that we did see this drastic increase in, of course, their revenue is, of course, going to be the fact that they did increase their overall fleet size. We saw them go from only 3 vessels to 6 vessels by the end of the year, so that doubling in fleet size definitely came with some increased revenues. Now, I feel like it would have been even higher had we not seen, of course, the pandemic going on and trading being certainly limited to a certain amount that they could do, but I do think they capitalized on it well, and they were taking advantage of the vessels that they had at the time. Now, we do see here, though, that their net loss was actually pretty good. I mean, it was about an $800,000 net loss for the 3 months in comparison to a profit of about $0.5 million for the previous 3 months. So there was a big change there, but of course, like I did say, trade was limited. There was only so much that they could do. They were making more revenue, but their expenses were increasing as they were trying to get some of these different vessels out there. Their charter rates decreased, and so with all of that information, of course, we did see a bit of a loss. Now, next up, we are going to check out their EBITDA. Now, as we do see here, this is going to be standing for the earnings before interest, taxes, depreciation, and amortization, and it is a metric used to evaluate a company's operating performance. So basically, it's just a very raw version, and so very raw method to be able to kind of get an idea of what the profitability is looking like, to make comparisons to previous quarters, and it overall gives a good idea again of what their overall operational performance is. So as we do see here their EBITDA was at about $0.3 million for the 3 months ended December 31st, as compared to $1.1 million, which is going to be about a 73% period-to-period decrease. So there's definitely something to keep in mind. At the same time, I'm not very surprised by this at all. I would say that was a solid amount. I mean, I'm expecting that going forward, that is definitely going to grow a lot. But as we did see, again, their operations were going to be a lot more costly as things costed more. I mean, they were having some of their vessels were just docked. They were just gathering and building and spending cash basically to keep them docked and not really get any revenue from them. They weren't really able to do much work. They weren't really able to do much, honestly, in the majority of 2020. I mean, the first 8 months realistically. So whenever it does come to, overall that performance, it's one to keep an eye on for sure. I would say that now at this moment, as we have seen in 2021, they've made a complete turnaround. We will talk about that in a second here, but I think that we are going to expect to see this really grow dramatically going forward. So I'm not too worried about this one as long as the next financial results do perform a little bit better. Now, next up, we are going to take a look at the average fleet time charter equivalent, the TCE, and that was sitting at about $10,257 per day as compared to $10,789 per day for the comparable period previously. So I believe that that's not too bad. A 5% period-to-period decrease, considering everything that was going on in the world in 2020, it's definitely not bad. I think that it could be a little bit better, of course, but it did get better from the previous period. The previous period before that, it was actually a lot higher. There was a lot higher rate of decrease. So the fact that that is slowly starting to get better is definitely very promising. Now, we do have to consider that some of these vessels in which they have just recently delivered, their charter rates were very, very high in comparison to this. Some seeing upwards of of $22,000 to $25,000 a day. So with that being said, I am expecting that going forward, again, that this is going to grow substantially from this quarter that they just reported to the first 3 months of 2021. And I'm very, very excited about where that is going to go from there. Now, another good aspect of this overall business, and I think it actually did come in handy a lot, was that the cash and restricted cash was at about 9.4 million as compared to 5.1 million, or an 84% increase period to period. Now, this is going to be a lot due to some of these different, capital raising events that they did do. They did a few, a few stock offerings, and they did a few things like that. And I think it actually came in handy. It was very important that they did increase their cash, and they used that cash to capitalize on some of these vessels, as vessels were at a great discount. Some of these time charter rates were starting to increase. The Baltic Dry Index was starting to increase again, which we will check out in a second here. And so with all of that information, they did start to gather up a lot more cash in order to acquire some vessels, which would then return them profits in the future. And so I think that is definitely a great sign. Going forward, I honestly would not be surprised to see that number increasing as well, as they do now have a very, very, a substantially higher amount of vessels that are going to be bringing them daily revenue. So with that being said, that was about it for the period on period results. As we can see here, we will check out some of the end of the year highlights. That fact that revenues did net about 12.5 million for the year as compared to 6 million for the year the previous year. That's about a 108% period to period increase. Now, I think that's very amazing. I think that being able to double basically your overall revenue in a year like 2020 is very impressive, and I definitely give a major kudos to them for that. I think, of course, as we can see here, that there was a much bigger net loss than the net income that we did see the previous year. But of course, as I did say, a lot of the operating expenses were growing. It was taking a lot more money in cash for them to actually stay afloat in a sense. And so with that being said, it doesn't surprise me. But what does tell me is, going forward, their revenue is increasing dramatically. And realistically, as they are able to now get some of these ships delivered, as a lot of them aren't docked, as trade and demand is starting to really increase, some of these operating expenses will decrease. Some of these, overall just fixed costs that are going to be there whenever you have to just basically sit a big vessel in a dock, a lot of that's going to increase. And I think that as, or it's going to decrease, sorry. So I think as some of this revenue does increase and some of these operating expenses do decrease in the next year, that this is going to definitely display a lot of growth, especially in the next financial results. And I'm very, very excited about what is to come in the future. Now, overall, the EBITDA was at about 2.3 million for the year ended December 31st, 2020, as compared to 2.2 million for the year of December 31st of 2019, which is a 5% period to period increase. So whenever we do consider the fact that EBITDA or EBITDA, however you want to say it, if that is basically, it's typically considered a great way to overall just monitor the overall, how well a company is operating and performing, to consider the fact that they grew 5% period to period, year over year. That's amazing, especially like I've said multiple times in 2020, because 2020 for the shipping industry was absolutely horrific. Absolutely terrible. Charter rates were very low. The overall expenses were very high. There was really not much work. Demand was closed. Ports were closed. There was a whole bunch of tension. It was insane. And so the fact that we are seeing them still be able to grow in a time like that definitely does provide us with a lot of foresight that going forward, it is only going to get better from here. Now, the reason I have been saying that it's going to get so much better is we have to think about the overall growth from this company. If we do go ahead and we pull it up here, in the last 3 months alone, since this period that they just reported ended, they have more than doubled their fleet size. Whenever this report was made, they only had 6 vessels. They now are sitting at 14 vessels, which represents a growth of about 8 vessels, or over 100%, in only the last 3 months alone. So we can only consider that going forward, these numbers, their financial results, their overall revenue, their cash, it's all going to increase dramatically. And I think that is going to be something that we definitely see reflected in their stock price in the coming months. Now, I do believe that their stock price is starting to make a healthy correction. I would say around that dollar mark, they were a little bit high. A piece of me felt like there was the potential for them to be able to actually maintain those levels. But realistically, whenever you do consider valuations, I think that them around the 70 to 65 cent mark does make a lot of sense in a sense. But whenever we consider where it's going at the moment, I think that going forward, as they are going to be increasing revenue, as their overall net income is going to grow, I think we're going to see some supreme profitability very, very soon here. I think all that's going to be reported and reflected in their stock price. price, and I would not be surprised to see this thing really continue to grow. With that being said, I did say that I would let you all know what I was doing with this stock. Personally, I will be continuing to increase my positions. Over the course of the last 3 months, I have increased the original position that I started by about 400%. I'm currently sitting at somewhere around 1,500 shares, and I'd like to grow up to maybe between 3,000 to 5,000 shares by the end of this year. I really believe that this company has loads of potential. I cannot see why they would not be successful. I think as everything is increasing, as the Baltic Dry Index has been performing very well over the last couple weeks, in the last couple months realistically, that this company is destined for success. It's my personal opinion. At the end of the day, I'm not a financial advisor. This is not financial advice at all, but I truly just believe that with overall the way that they've been performing, the way that they have been able to overcome some of these obstacles, the way that they are capitalizing on some of these moments and these opportunities to really grow their company, all of that is going to allow them to see some major improvement and growth in the future. And as they do continue to expand, I think again that is going to be reflected in the stock price, and that is why I'm very excited about being an investor into Castor Maritime. With that being said, that is going to be about it for today's review of their financial results. Again, at the end of the day, this is all just my opinion. This company and this stock could just tank for the rest of the year. You never really know, but I truly do believe that they have a lot of potential, and I'm going to keep reporting them to you all, keep giving you all updates whenever we do get new information, and let you all know what I'm doing. With that being said, I hope you guys did enjoy today's video. If you did, you can let me know by smashing that like button and subscribing to the channel if you are new. With that being said, I do post on this channel 2 to 3 times every single day, and I can't wait to see you all next time. Peace.